Yo, what is going on YouTube? I am Germ here. As you guys can see up on the screen today, I want to talk a little bit about PayPal Holdings Incorporated. This is obviously a stock that a ton of people are talking about right now. And a ton of people are giving thoughts and opinions on it. Everyone, it seems like, has an opinion about it. But also so many people are wondering, like, hey, is this an awesome buy the dip opportunity? Is this an awesome chance to get a great company at a great price? We hear all the time about, wanting to buy big tech stocks and huge cap stocks at great prices. And, when you see a company like PayPal's had this crazy run up, to $310, everyone's like, damn, I wish I could get in at PayPal at 124. And then all of a sudden you get to 124 and everyone's scared and no one wants to buy anymore and everyone's selling off. But when it was at 300, 124 seemed like an amazing price, and so many people are like, damn, if this thing's ever at 124, I'm going all in. Now we're there, and people don't know what to do. So obviously a lot of things have changed, but I just think it is very interesting. So in this video today, we'll be going over an article that was recently posted about PayPal, and giving some analysis and breakdown of their most recent earnings report, but also just kind of what's going on with the company in general. And I'll be giving some of my thoughts and opinions. Obviously no financial advice. I'm not telling you to buy, sell, do anything like that. Just talking about the news, going over some numbers and giving my thoughts and opinions. So definitely drop a like if you guys do enjoy that. I would appreciate that a ton. And subscribe to stay up to date on all my latest content. With that being said, let's get right into this. So again, this chart looks so crazy for PayPal. Just absolutely massive run up over the past 5 years, topping out at right around $310 in July of 2021. Before, since then it's been really rough, and we're now down 59-ish, 60-ish percent from those 52-week highs, from those all-time highs. And obviously recently stuff's been extra bad, down 36% year to date. There's a ton of stocks like that on the market that are down like this, but not a ton of massive growth tech stocks that are down this much year to date. And the weird thing about PayPal is that this thing wasn't doing great before. It was doing decent. We were down 9-10% on the year. That's pretty normal with a lot of other big stocks, but then in the past 2 days being down 29%. Obviously yesterday we saw PayPal fall off a cliff after its earnings report came out, being down 25%. And then some people were like, hey, we're going to buy the dip. Maybe it's done. Maybe it's going to come back up. Maybe it'll rebound. Maybe people are overreacting. And then we get another -6% day here today. Now, this wasn't totally shocking to me. This kind of similar thing we saw with Netflix. I'm pretty sure, we kind of saw a drop and then another little drop, and then it rebounded big. But obviously it's come back down, as the whole market has as well. So kind of interesting stuff there. But I did want to go over this article from The Motley Fool, why PayPal stock keeps crashing. 4 more analysts dissed PayPal stock today. This is from Rich Smith, and he said it has been a little over a week since I warned investors ahead of PayPal's fourth quarter earnings report. I might add that this stock was far from cheap. Now the earnings are out, PayPal stock has plunged 25%, and saw some folks on Wall Street questioning precisely how much PayPal is worth. And it's not only folks on Wall Street, it's folks everywhere. There's so many people right now wondering, hey, okay, PayPal was overpriced before, it missed expectations. It was kind of a pile of trash, whatever. Hindsight's 2020. Is it still a pile of trash? Is it a great buy now? Is it a fair value? Now that it's crashed down 30% in 2 days, is this the perfect time to buy it? Is this still a horrible time to buy it? What's going on? Everyone's wondering that, and that's partly why I want to make this video as well. In a quartet of reports that struck nothing but sour notes this morning, TheFly.com reported that Barclays has cut its price target to $200 for PayPal. Again, right now we're at 124, so still getting to 200, that'd be a nice little run up. Needham & Co. cut its target to 166. Again, we're at 124, 166. That would be, like a 25-30% up from here. That's not too shabby. It's still not too bad. Bernstein cut it to 140. Now we're starting to talk about, not great, not amazing returns. I don't know exactly what that would be. It'd be over 10%. So, hey, still not too bad. And DZ Bank delivered the coolest of all, repricing PayPal to 140 and downgrading the stock to boot. So that is rough. Again, PayPal not getting a lot of love from the market. not getting a lot of love from its earnings, and not getting a lot of love from the analysts. Bernstein recalls that quarter four was perhaps one of the most disappointing quarters for PayPal, reports to fly, with the company only barely meeting sales expectations, missing earnings forecast by only one unattainable penny, and warning of potentially huge earnings miss as bad of 65 cents per share in the coming year. PayPal earnings in 2022 will face brutal comparisons to the growth fintech was able to post earlier in the pandemic, and also the painful loss of eBay. That is massive. The fact that they lost eBay, it's massive in the short term, potentially massive in the long term as well. But obviously, their goal is going to try to be to replace that money adequately and replace that business, that revenue, those profits, everything there. And that, obviously, that's only making things worse. But yes, everything looks so horrible, but now that the bad news is out, there is some people on the other side being like, hey, we were maybe priced to perfection before. We got far from perfection, and we got lowered guidance, we got lowered expectations, all this stuff. Now, how much worse can things get? Are the 2022 earnings reports, is next quarter, is this next year going to be even worse than this? Or might we get some, surprising beats? Could they have started to hopefully conservatively project an estimate going in the future? So hopefully we can get some revenue and profit and growth beats here in 2022. That'd be awesome, because we see right now companies are all over the place. You have Netflix missing, PayPal missing, Facebook missing, but then you have Amazon, Google, Apple, all hitting and all doing really well. You have Snapchat, Pinterest exploding. I think Snapchat's up 56% or something ridiculous today. So depending on where you set the expectations, you have a chance to surprise or under deliver. So that could be something maybe to watch out for the next coming year or so. It's like, can things really get worse? I mean, absolutely they can, but are they going to? I don't know. I tend to think not. But despite all the doom and gloom and price target cuts, both Barclays and Needham still hold out hopes for PayPal recovering to become a long-term winner. However, and both banks maintain buy ratings on the shares as a result. So that's still a good sign. Even though they're lowering their price targets, they're still maintaining those buy ratings. So this guy says he wants to take a look at the latest numbers. Over the course of 2021, PayPal generated $5.4 billion in positive free cash flow. After its steep sell-off, it's now at around $146 billion market cap, or $143 billion net of cash and debt. So dividing the free cash flow into that cash-adjusted market cap, you end up with an enterprise value to free cash flow ratio of 26.5 on PayPal. Now, personally, he says, the author of this article, for PayPal to be a buy for him, he would need the stock to forecast to grow earnings at 26.5% or better. Obviously, that is very, very steep growth. That is a big ask for most companies over the next 5 years, especially over the next 5 years, to justify that valuation. Instead, most analysts are forecasting growth rates of less than 16% for PayPal over the next 5 years. For this reason, he would, while he does consider PayPal a lot cheaper than it was last week, it's still not cheap enough to qualify as a buy for him. Until it becomes an out-and-out bargain, he is not going to be a PayPal buyer. I thought that was very, very interesting, and I totally get where he's coming from. I still think by a lot of value metrics, depending on what you look at, PayPal could be a screaming deal. It could be still a pretty awful deal. I know that right now it's sitting at around a 35, price to earnings ratio, and that's tough. 35 PE, that's not cheap. That's not, like this is a must buy or anything like that. Especially as a lot of these, expectations and future guidance and everything comes down. I think that is a little bit rough. And I absolutely believe, I don't know if it's going to happen, but I believe it's possible, for PayPal to drop even further and further and further from here. A company with growth like this, do they justify a 35 PE ratio, or should they be closer to 30? Should it be closer to 25? Like, is 20 even possible? Who knows? And then does the company start to become, a lot more attractive at those levels? Maybe a $90 share price, maybe a $75 share price, maybe something like that. I don't know if it's even possible that we're going to see something like that. But I do know right now, just looking at PE ratios and stuff, when you look around the market and you see a 35 PE ratio, for PayPal, and this has, this is Qualtrim, has them at a 32.93. And then you look around, you have companies like Apple, this is Google with a 26.56 PE ratio and like insane amounts of growth and way less risk and way less, not way less, obviously, potentially way less risk and potentially, much more to be excited about and a bigger moat and way more diversified and less competition, all this stuff. And then you see companies like Apple as well, at a 29.03 price to earnings. Again, all kinds of revenue, all kinds of free cash flow growth, and just so many good things. It's tough. It's tough to justify, at least in my opinion, investing in PayPal right now. Now, again, they are, decreasing that shares outstanding. That is a very, very exciting thing to see. EPS has been kind of flat recently. Revenues have been kind of flat over the last couple of quarters. Is there a lot of growth to be had for this company? I don't know. Obviously, we saw an insane amounts of growth over the pandemic, and what's going to be the next catalyst to get this thing moving again? I'm not quite sure. I don't know. Again, if you are buying PayPal, I don't think that's necessarily a horrible thing. And I have bought a little bit of PayPal over the last couple of days because I want to have some exposure to this because, again, it has so much potential. PayPal is an old giant, not an old giant, but it's one of the first payment processing giants. And I do think losing eBay is a massive deal. And I think yes, they have increased competition, but still they have Venmo, which I find very, very valuable. PayPal has so much name recognition and brand value in this space, and I could see them being able to turn things around. I could see them being conservative with their estimates and stuff like that. But it's definitely not a stock that I personally am willing to go all in on right now or throw any crazy amounts of money into. But again, I do love just the idea of, buy low, sell high, that when a company is beaten down like this, especially if it's a, big, well-established growth tech company, that I don't hate buying the dip on it. And obviously, people that love this stock at 300 or 250 or 200 or 175 or 150 or whatever, yeah, I think you should be interested in, probably, at least considering buying the dip in this one. I don't know, but like I said, for me, there is probably better deals on the market right now, but as part of, a diversified and balanced portfolio, I think PayPal could be worth some of the risk in some regards. Now, obviously, there is a ton of risk. It's not like PayPal is a surefire thing or anything like that, in my opinion, but I think there's worse buys you could make right now as well. But that is pretty much it for this video today, guys. Definitely drop a like if you did enjoy it. I would appreciate that so much. Leave a comment down below. Let me know what you think about PYPL. I'd love to hear your guys' thoughts and opinions. Subscribe, stay up to date on all my latest content. Hope to catch you guys in the next one. But until then, peace.